The United States has employed an array of sanctions against China in a concerted effort to curb its growing dominance in various markets. Despite these diligent endeavors, the US remains wary as China's influence continues to expand. The latest chapter in this economic confrontation unfolded as China diverted billions of dollars toward the production of legacy chips, a strategic move that propelled it to the forefront of legacy chip manufacturing on a global scale. With applications ranging from automobiles to electronic devices and even military equipment, legacy chips have become an indispensable component of modern technology. The remarkable success of China in establishing itself as the premier legacy chip producer underscores its proactive approach to circumventing sanctions and leveraging market dynamics to its advantage. Amid concerns about China's ascendancy, the US and Europe are grappling with the imperative of deploying additional sanctions as a countermeasure. Yet, a vexing question looms: can anything truly halt China's inexorable rise? In today's video, we will delve into the escalating concerns surrounding China's accelerated production of legacy chips. Welcome to China Ed, a channel where we talk about international politics and geopolitics, especially seeing China's side of the story. For those seeking fresh perspectives on rapidly evolving global dynamics, our channel offers an unorthodox perspective. Since China's global influence is growing due to economic, military, and its political domination, it has now become the focal point of the world. It also aims to unpack the reasons behind the lackluster impact of prior US chip sanctions. In the final analysis, the pressing query remains: can the US effectively restrain China's onward march? Let's find out started. A retrospective analysis of the ongoing saga reveals a litany of instances where the US imposed chip sanctions on China. The tactics employed included curbing domestic companies' chip supply and pressuring key allies like Japan and the Netherlands to withhold critical chip equipment. A meticulous scrutiny of Forbes documentation traces this saga back to its origins in 2018, the repercussions of which are still reverberating in the current year, 2023. While these efforts merit commendation for their tenacity, the underlying question persists: have these sanctions produced the desired outcomes? A closer look at the timeline reveals a rather curious discrepancy. Despite the sanctions that commenced in 2018 and have endured until 2023, the prevalent notion that these measures would deliver a crippling blow to China's chip industry remains largely unfulfilled. Contemporary headlines underline the burgeoning unease amongst US and European officials due to China's brisk advancements in the realm of legacy chip manufacturing. Intriguingly, the trajectory of response seems to circle back to the imposition of additional sanctions on China. However, this tacit admission that the initial sanctions fell short inadvertently underscores a prevailing apprehension: China's capacity to commandeer the market. This, in turn, poses a conundrum. How effective can sanctions be when the US and Europe themselves are increasingly reliant on Chinese chips? The anticipation of more sanctions on the horizon notwithstanding, a broader question lingers: what precipitates this growing disquiet? Why has the US struggled to rein in China's chip industry, culminating in this latest manifestation of urgency? A deeper analysis is warranted. While the US initiated sanctions targeted at China, the scope of these measures primarily pertain to curtailing advanced chip production. However, China's strategic response was astute, focusing its investments on untapped reserves in the form of legacy chip production. The implications of this strategic pivot are far-reaching. Contrary to popular perceptions, legacy chips continue to retain their relevance and experience sustained demand, even leading to shortages in the market. Recognizing this trend, China expedited the production of these chips, with projections indicating that by 2026, it will surpass the US in the construction of fabrication plants and key facilities for semiconductor manufacturing. This underscores a crucial nuance. Legacy chips, categorized as advanced semiconductors utilizing 28-nanometer technology or higher, remained unscathed due to their enduring necessity. Beijing's substantial investments in chip companies, buoyed by governmental support and international introductions, yielded significant dividends. This symbiosis gained momentum amidst the backdrop of a global chip crisis, with China's production capacity surging, thereby triggering concerns for the US, particularly concerning China's chip sales. What sets China apart is its prescient recognition of the value inherent in legacy chips. While other nations potentially underestimated their significance, China amplified production capacities considerably. Compounded by acute global chip shortages, the demand for these legacy chips gained momentum. This created a challenging scenario for the US, which, while grappling with its chip shortages, struggled to match China's production capabilities, inadvertently paving the way for China's dominance in critical markets. Remarkably, China not only managed to meet its domestic demand despite sanctions, but emerged as a preeminent global chip supplier. This development raises the specter of the US not only grappling with competitive shortcomings, but also becoming increasingly reliant on China for chip supply. As a response, US and European officials find themselves pondering strategies to counter China's burgeoning chip industry. Yet, an underlying dilemma persists. Can US companies truly vie with their Chinese counterparts? Enjoying the video so far? If yes, like the video and subscribe China Ed to promote independent journalism on China. Let's continue now. A stark reality emerges. Chinese companies have benefited from substantial government subsidies, which have enabled them to manufacture chips at considerably lower costs. This lopsided equation effectively neutralizes any semblance of competition. In a climate where the narrative of the US distancing itself from China gains prominence, the pragmatic truth remains that the US continued to source chips from China. Moreover, projections suggest an impending surge in chip demand. This in turn begs the question, how should the US navigate this complex landscape? Conventional wisdom might suggest nurturing domestic chip companies to fortify the US stance. However, the prevailing inclination in both the US and Europe seems to lean towards a sanction-centric approach aimed at countering China's ascendancy. These endeavors cast a spotlight on Chinese subsidies as a contentious issue. After extensive deliberation, the US and Europe's preferred strategy revolves around minimizing dependency on China. This approach aligns with their existing risk mitigation stance, yet the efficacy of future sanctions remains uncertain, with historical attempts underscoring the uphill battle of curbing China's trajectory. Officials assert that China's market supremacy could potentially spell the demise of the US and European chip industries. This urgency propels their efforts to rein in China before the situation escalates further. However, the strategic choice to vie for displacing China from its current position begs a broader query. Does this approach merely underscore a paradigm of aggressive competition, or does it resonate with the echoes of a Cold War? Consequently, a compelling argument emerges for the US to explore alternative avenues to address China's burgeoning dominance in the chip market. The spotlight shifts to whether the primary concern should focus on China's ascent in the chip market or safeguarding the interests of domestic companies. The ultimate trajectory that the US embarks upon hinges on the delicate interplay between countering China's market rise and nurturing its industrial prowess. As the narrative unfolds, it will be interesting to observe whether the US can strategically maneuver to ensure its relevance in the evolving landscape of chip production and supply. How do you think the growing competition between the US and China in the chip market aligns with broader geopolitical tensions? What do you think about China's strategy of focusing on legacy chip production, and how has this impacted the balance of power in the tech world? Considering the complexities of the global supply chain, what challenges might arise if the US and Europe attempt to minimize dependency on Chinese chips? Would you like to get more videos from us focused on China? If yes, subscribe to China Ed to get Western propaganda-free news on China. Thanks for watching.